So I think we'll go ahead and start, and Linda hopefully will be on shortly. There's Maria. And so I'll call the regularly scheduled February meeting of the Board of Finance to order, and we can begin with the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, thank you. The first order of business will be a presentation on the 2020 audit, and we have our auditors with us today. And so I don't think we need to tee this up any other way, Amy, but just to say welcome, and Nicoletta and Jessica, and let's why don't you guys take it away?
Thank you. Jessica is going to share the screen, so let's give her a second.
Yeah, I will share the screen. I say my thing did say someone needed to be admitted, but I will share screen.
Good evening, everybody. And thank you for having us today to present the 2020 audit results. The next slide, Jess, will have the agenda. I'll go over terms of engagement, executive summary, some financial highlights, and then Jess will talk about the results of the federal state single audit, governance communication, and management advisory later. And then I'll take it over to finish up with upcoming GASB pronouncements, just a listing of them. I will not bore you going through all of them one by one. And then we'll close with the announcement of a merger of Bloom Shapiro with CLA. So we were engaged to express an opinion on whether the basic financial statements were presented in accordance with GAAP. In addition, we were engaged to express an opinion in relation to the basic financial statements on the schedule of expenditures of federal awards, the schedule of expenditures of state financial assistance, an opinion on the compliance related to major federal programs tested and major state programs. Also, we were engaged to provide a report on internal controls over the financial reporting and compliance with laws and regulation, contracts, and grants, and provide a report on internal controls over compliance related to major federal board programs and major state programs. So all these items are included in the CAFR report, state and federal single audit reports, which we'll go over in high level. As far as the financial statements go, we issued an unmodified opinion on the basic financial statements, and that's the best opinion available. And the report on the internal controls over financial reporting was clean, did not have a finding. So all good news in this front. Federal single audit and state single audit that both include, in addition to the internal control over financial reporting, for each one of them, the reports are very similar. They include an opinion on the major federal program and the report on the internal controls over compliance. Both state and federal single audits, they were clean. So they both had unmodified opinion on major programs that were tested, and there were no findings to report on internal controls over compliance. In the next couple of slides, a few slides, I'll go over the numbers that are presented in the CAFR. In this slide is a summary in comparative basis for the governmental activities, which are all the funds of the town, with exception of trust and agency funds such as pension or PEB and student activities. The town ended the year with a total net position of $116 million versus $109 million, as you can see on this page. Total assets increased, so did liabilities, but then overall the total net position increased by about $7 million. Of $116.5 million, $104 million is invested in net capital assets, and the rest is unrestricted for $12.24 million. Next slide. So included in the CAFR, there are financial statements for governmental funds. And in this page, you'll see the change in the fund balance for governmental funds, and each column represents a major fund in financial statements, and a major governmental fund column represent all the other funds that are not considered major. The town ended the year, as you can see on the right-hand corner in the bottom, the year with a fund balance of $31.8 million, which was a decrease of $3.3 million from the prior year. And the majority of that decrease was in the capital project fund, which was a decrease of $5.9 million. And Jess is putting the mouse there to show where that number is.
I'm trying, but it keeps disappearing on me.
Included in the total of $31.8 million is the general fund balance of $18.9 million. And during the year, the town reported an increase on the fund balance of $1.8 million for the current year. In the next slide, as you saw from the prior slide, general fund had a total fund balance of $18.9 million. And if we break that down, $105 was non-spendable, committed was $651,000, assigned for encumbrances $373,000, and unassigned was the difference of $17.8 million. In this slide, it's a historical view of the general fund. Unassigned fund balance is a percentage of the expenditures and transfers out. And as you can see from the slide, the number increased year over year, with 2020 versus 2019 was almost the same. And this is percentage-wise, not dollar amount. In the next slide, in this slide, we included a high-level summary of the budgetary reporting for the general fund. General fund revenues for the year were $1.4 million higher than budget. General fund expenditures were $299,000 lower than budget, and property tax collections were $608,000 above budget. Collection rate for the year was 99.4% on the current levy, which was the same as the prior year. So this is very high level. Next slide. Pension and OPEB financial statements change in the net position for them is included in this page. The total of all pension plans and OPEB, so other post-employment benefit trust fund, net position at year end was $85 million. And that was an increase of $1.9 million in the year, which means that total additions, which are employer and employee contribution, along with investment income, exceeded the total benefit payments paid for the year by $1.9 million overall. And you can see here how each fund fared during the year as far as the change in the net position. The town reports pension liability and other post-employment benefit liabilities in the government-wide financial statements. For pension liability, the liability for the general government pension plan was $10.5 million, and that plan was 70.35% funded. Police reported a net pension liability of $4.6 million at year end, and that plan was 79.58% funded, and Board of Education plan had a liability of $9 million and was 73.5% funded. OPEB liability of the town for the retiree health plan at year end was $8.3 million, and this plan is 68% funded, which so far is the highest funded percentage rate that I've seen. So those are good rates. And I'll have Jessica go over the results of the federal single audit and state single audit. Take it over.
Okay, so as Nicoletta stated, each year we do a federal single audit if total awards expended were over $750,000, and we also do a state single audit. So this year, the total federal awards expended was $1.8 million. When we do the federal single audit, we do a risk assessment to determine which programs we're going to test. And this year we tested the special education cluster, which totaled 1.2 million of the expenditures of the 1.8 million total expenditures. And as Nicoletta had said earlier, we had no findings over this program, and we had no findings related to internal controls over the program or the financial statements.
Jessica, could you, the acronym IDEA?
Nicoletta, I'm not even sure. I just call it IDEA all the time. It's a special education monies.
It's intellectual disabilities, education, something or other.
Thank you, Linda.
To say I've called it IDEA my entire career. I've never been asked that question. So now I will learn that.
So I think that's what it is.
It's very close.
All right. For the state single audit, the total amount expended this year was 13.8. There are exempt programs such as school construction that we don't have to take into our analysis when we determine what we're going to test. So of the 13.8, the pool dropped to 2.9 million that we needed to analyze for testing. And we were able to get coverage and our proper risk assessment and test just the open choice program, which was 1.6 million of the 2.9 million total expenditures. And again, we had no findings over that program, over internal controls in the financial statements, or the single audit program that we tested. So like Nicoletta had said, both clean for the federal and state single audits. We are required to communicate with those charged with governance, which is why we're here tonight, to discuss some things regarding the financial statements. We did not have any new standards that were adopted this year. Due to COVID, GASB actually issued one standard that pushed all of the standards out 1 year, so nothing was applicable for this year. And I'll give Nicoletta the joy of going through all the upcoming standards in a few slides. Within the financial statements, there are significant estimates. We do look at these estimates and how they're derived to determine that they're reasonable. And they're listed out here. So the first one is the useful lives for depreciation of capital assets. Management does an estimate of the useful lives of various capital assets, which is used to calculate depreciation. So we would compare that to prior years, look at any new assets that were listed to make sure that the useful lives are reasonable based on the asset that was added this year. Also an allowance for uncollectible receivables. So this is in relation to tax collections, items that may not be collected. And again, this is management's judgment, and we would analyze it to the prior years or suspense write-offs in your case, just to make sure that the allowance is reasonable within the financial statements. For the net pension liability and the net OPEB liability, we use a third party, the actuaries, that actually confirm that with us. Management goes through and discusses with them different investment rate of return and other items that go into the calculation of the net pension liability and net OPEB liability. We do look at their report for reasonableness, but that is actually calculated by an outside third party. Similarly, the IBNR is calculated by the outside third party that's incurred but not reported healthcare costs.
And could you explain the IBNR acronym, please?
Yep, incurred but not reported healthcare costs. So those are the costs that you've incurred as of June 30th, but may not be reported. But since we do the audit later, they look at what's past June 30th that may have related to June 30th, and they come up with an estimate of those costs, which are included in the financial statements.
Thank you.
Some additional communication. We did not have any disagreements with management during the course of the audit. Management did not consult with any other accountants. For instance, if we recommended a journal entry or questioned how something was done, if they didn't like our answer, they didn't go shopping for another answer with another firm. And then we had no difficulties encountered in performing the audit. We had no uncorrected misstatements and no independence issues. We did do this audit, or the bulk of this audit, remotely this year. So just kudos to the finance department for getting a lot of this stuff electronically for us. And it went fairly smoothly considering the additional work they had to do for scanning and everything to make this audit happen this year. We do have a few recommendations, which you've probably seen on the management letter for a few years now. There's nothing new this year. Some of the things that we have on here, like the capital asset reporting, the positive pay system, those are going to be implemented when the new software is implemented. And Amy, correct me, I think that's another year out, maybe, or is that going to be in the fall?
No, so our financial part is going to go live April 1st. So we'll have actually all of the management comments will be done by then, the positive pay, the capital assets, and the accounting procedures manual, since they all go hand in hand.
Yep. And I was going to say, I know you guys are working on the accounting procedures manual with the new system. Yep. So those have been on the management letter for a few years, but hopefully you won't see them again next year. The other item is the fraud risk assessment. We do recommend this to a lot of towns, and I know it is probably in the budget, I think, for 2022, and expected to be done at that point. And again, this would just look at different areas within the town for possible risk related to fraud or other internal risks. And with that, I'm going to hand it back over to Nicoletta to go over all these upcoming GASB standards.
So we include in this presentation the upcoming statement standards for the next 3 years, but I'm not going to go over each one of them in detail. We listed them there just so you are aware that in the next 3 years, there will be several GASBs that are going to be applicable or effective, but not necessarily applicable to the town. Next year
is generally accepted what? GASB?
A Government Accounting Standards Board. So it's the board. That board sets all the accounting pronouncements that are going to be implemented for government entities. Yep. I'm sorry, we are so used to using acronyms now that we have to think for a second.
That's fine. No, I appreciate that, and I know what GAP is and CAFR, but if just the first time through you use an acronym, you could explain it. That would be a big help.
Yeah, so it's a Government Auditing Standards Board, which is the standard setting body for government accounting.
Thank you.
So for fiscal year 2021, which you guys are in now, Statement 84, fiduciary activities, Statement 90, majority equity interest, and Statement 92, Omnibus 2020 are going to be effective. But to our knowledge so far, only Statement 84 is going to be applicable to the town, where the town is going to take a good look at all the fiduciary activities to ensure that they are reported appropriately in the financial statement. So it's not going to be a day-to-day type of impact on the town's operations, but it's going to be reporting in the financial statements. So one example that I could give is that agency funds, instead of now being reported as agency funds, that terminology is not going to exist anymore. They are going to be maybe considered custodial fund. I say maybe because it depends on some criteria that the town will go through to evaluate and see if it's going to be a custodial fund or a special revenue fund. So there is a questionnaire that we have put together that I'll go over and provided to the management to determine what the impact is going to be in the financial statements for implementing this statement. In fiscal year 2022, there'll be a lot more of them that are effective, with the biggest one and most impactful for majority of government entities being the Statement 87 leases. So this statement will require that any leases, what we currently call capital leases or operating leases, if they are over 1 year, they're going to be included as a liability in the financial statements of the town, and that is going to be in the government-wide financial statements. And this statement applies to any cases where the town is either lessee or lessor. So for the lessor, receivable will be reported. For the lessee, it's going to be a liability. Depending on the number of lease agreements the town, including Board of Ed and all departments that might have during the year, this statement could be quite extensive as far as the time being involved to implement it from the town and us to audit those leases. The rest of the GASB standards are not going to be applicable to the current year, to fiscal year 2022. 89 definitely not, because it applies to enterprise fund reporting. Omnibus, it's going to be minor effect. And 93, if the town has any agreements that are related to interbank of the LIBOR rates, that this is going to change it. So town should take a look, and maybe your financial advisor will be the one that you need to talk about and see if there is a reference in any of your finance contracts of that rate. And 97, if the town offers any 457 deferred compensation plan, again, another assessment is going to be done of those plans to decide or to determine if those plans are going to be reported in the financial statements or not. 2023, there are 3 statements as of now that are applicable. I say as of now because who knows, more statements might be coming our way. GASB likes to throw statements our way every year. So 91, 94, 96 as listed there are going to be effective. Based on our knowledge of the town's activities, none of them might not be effective unless there are some subscription-based information technology arrangement that the town has entered into, and they will need to be evaluated in order to determine how they will affect financial statements of the town. And this is our last slide. Effective 1/1/2021, Bloom Shapiro merged with Clifton, Larson, and Allen, and acronym is CLA, and we call ourselves CLA. CLA is the 8th biggest accounting firm in the country, so it's a national firm. We are excited about the merger because we share the same values and culture as CLA. We mean legacy Bloom Shapiro. And our teams are going to remain intact. Our clients are going to be served with the same teams. And our fee structure is going to remain the same. Currently, CLA serves 3,500 government clients throughout the country. Those clients are anywhere from smaller to larger municipalities, state agencies, and government agencies. We are excited about the merger because we are going to be able to use the resource to have the backing of a national firm and have more resources to our disposal in order to help our clients and our staff to succeed. So in the last slide, I guess this is the last, our contact information is here. So that's me. The titles of all partners changed to principals and managers to directors. So these are our new titles and our new email. So it's first name, last name @claconnect.com. Our 4 numbers change the same and our physical address is the same. Thank you. Any questions?
Lisa, you have a question? Go ahead.
Yes. First of all, thank you and congratulations to Amy and staff for getting such a great report. It's a lot of work, and very proud of you for what you did. It's outstanding work, and it shows in the summary by our auditors. And also thank you to our auditors for your work. I had a couple of sort of big questions and then a few specific ones. For the big picture, when you do the audit, you do gross spending, but you exclude, I'm just trying to get clarification, on sort of activities, funds, but you include all grants in this audit, right?
Correct. So we audit the schedule of expenditures and we go through, so your question is strictly related to the grant auditing, correct?
No, I just wanted to understand sort of the basis. You said at the beginning you excluded some minor funds like activities, fees, and stuff like that from the audit. I was just trying to get clarification on what you didn't do.
No, we we do not exclude anything from the audit. Jess mentioned in her presentation that when it comes to the state financial assistance, not all of it is subject to the audit. And the state is the body that tells us what is not supposed to be audited and what is subject to audit and what is not. Some grants that the town gets, such as school construction grants, are not subject to our audit when it comes to the single audit, state single audit, because they are audited by the state at the end of the construction period, or maybe a few years after the construction has ended. So they do the audit themselves, so they do not require us to do the audit. But everything else that is not considered exempt from the audit, we do audit as part of the single audit. But those expenditures for the let's say an example that I just mentioned for the construction school, those capital expenditures are included as part of our overall audit of the financial statement. So they're not totally excluded from the audit, they are excluded from the state single audit, the other report that we issue.
Okay, thanks for that clarification. I wasn't sure about that. And so when you look at it, you look at the total expenditures. So it's not just money we collect from taxes, but also from grants, right? Correct. Yes. So we audit financial statement as a whole. We do not exclude anything in financial statement. But with that being said, we don't do 100% transaction testing. We test, that's okay.
use sample sizes and all that. Yeah.
So then my question to you, and this is more perhaps a policy question that you might not know, but when we go to referendum, we only put to referendum not all the expenditures of the town, but only those that are taxed. We don't always include some of the grant money and show, the full cost to the public. And my question is, we have to do an appropriation. So how does that all fit together? When is the appropriation done for the grant money that isn't sent to the voters? And should we think about doing it a different way?
So the appropriation that you do is just to ensure that all the expenditures of the town, regardless of source of the revenue, follow the same internal controls. So they're all approved, and the expenditures do not exceed that budget. Because let's say you have a grant that's $100,000, your appropriation is going to be $100,000. So your appropriation ensures that you do not overspend the $100,000. Otherwise, the taxpayer is going to be paying the extra money that you might spend for that given activity, grant-related activity. So that's what your policy does when you set up the appropriation, and it's good internal control management-wise to have that. But when it comes to doing your, I'm talking about those grants that are outside the general fund. But when you talk about general fund expenditures, everything has to be included, and I'm pretty sure you do include everything in the appropriation for those. Now, as far as you asked the question, should we or should we not do, did I understand it right, appropriations for those other funds? Is that?
Yeah, so like education has about 10 million in grant funds, but we don't technically appropriate it. They show it to us, but we don't appropriate it through the budget process. So my question is, how are we as a town appropriating that money? And how should we think about doing it a different way? That's more policy, I think.
Yeah, so the Board of Education follows the grant policies when it comes to how to spend the money. But I understand your question, because sometimes they have to spend your money before they get reimbursed for those expenditures. So that is a management decision. So that's probably your decision as a Board of Finance on should you or should you not appropriate the money before they spend it. It's a different story when Board of Education gets a grant ahead of time, which is not a lot of those grants, and then they spend it. But then the question is, what do you do when you have a reimbursement-based grant that you have to spend the town money first, and then they get reimbursed? in my experience in dealing with other towns, you see both scenarios that some towns appropriate even grant money and some towns do not. And it's a management preference and decision that is being done.
So who does the appropriating? I mean, how do you spend grant money without an appropriation, I guess is my question.
But if you like in your case, when the Board of Ed spends the money without having an appropriation from the Board of Ed, they are spending the money because they have the grant award. They know that it's coming. So
But
it's the grant.
My question is, who authorized the spend, the appropriation? The grant money is the revenue, right?
Yes.
So doesn't someone have to appropriate the money, or does the Board of Ed have independent authority to accept a grant and expend it without management or the Board of Finance doing an appropriation, I guess is my question.
Well, Board of Education usually, I mean, they do report to their own board, to the Board of Education. But so the Board of Education is required to spend money for the general fund. They cannot spend money in the general fund without your appropriating that money for them. But for as far as grants go, the Board of Education themselves can approve those expenditures when they know that the grant is approved and awarded.
So they don't need to come to us for an appropriation. They have an independent appropriation power?
I think this may not actually be an accounting.
That's
question.
illegal.
Is this an accounting question or a charter question or a town attorney question?
Yes, thank you. I was going to say that that's more of a legal question than a accounting question. Yeah. That's why I said I've seen it both ways. And we, as accountants, make sure that if your approved policy is to go one way or the other, that you are following that policy. If our
that's sort of a long-term thing, maybe, Amy, we could discuss. I mean, it doesn't need to be done this year, but at some point, just what is our process to review? And then I just had a couple specific questions that are accounting. One of the things that struck me on A-40, you had said that you noted a highway pavement management and sidewalk restoration, but not understanding why you listed it as an unauthorized expenditure above what was authorized. Can you walk me through what that means?
Sorry, what page was that on the report?
I think I have that. A-40.
Oh, you have the smaller report. Hold on, let me open that report.
No, I don't. I didn't mark where I have it. But there was somewhere where there was a pavement management that it looked like it was spent more than what was authorized. And I wasn't understanding that. I can look it back and I can send it to Amy to send to you and maybe explain that later.
Okay, anyone else have any questions for Nicoletta or Jessica relative to the process they went through, the management letter, the results? If you have specific questions on all of this, then we should channel those through Amy and we'll get the answers I have. Okay, Amy, we don't need to take any action relative to the audit. We accept it as submitted and move on. Okay. All right, well, thank you very much. Appreciate the your dedication to working with us, and seems like everybody we work with is getting acquired. I don't know who's going to be next. Our financial advisor got acquired.
Last year, yeah.
Yeah, whatever. All right, well, thank you guys very much. Appreciate it.
Thank you. Bye.
All right, our next item on the agenda is approval of minutes from January 19th. Anyone have any comments on the minutes?
Sorry, I have one change, but it's minor.
All right.
on page 2, that our total debt has been kept around 60% of operating.
Oh, okay.
So that's all. And just kudos to our clerk for the minutes. I thought you did a nice job, and welcome.
Agreed. Good job. All right, so I'll be looking for a motion to accept the minutes with that one minor clarification.
I'll move to do that.
All right, Linda moves it. Anyone second?
I'll second it. It's Kevin.
Kevin Pearl seconds. All in favor say aye. Aye.
Aye. Aye.
Anyone opposed? Not hearing any. Those would be approved. Amy, Finance Director's report.
Yep, so just a few things. Under the grants and donations, that's just your updated listing. And then moving down under the fiscal year 21 bond issuance, we do have a settlement coming up in a couple of days for our most recent bond issuance. And as part of that process, we have to go out for our AAA bond rating and get that reaffirmed. So good news to report there that we did get that rating reaffirmed. They did let us know there are a lot of communities that they are either not raising their grade or their grade has been decreased due to the pandemic. So we were lucky enough to have a stable rating and being able to keep our AAA bond rating. So a copy of that report, if you're interested, was included in the communications section. So you can take a look through. Under the Parks and Recreation fee schedules, this was something that was previously a discussion item. So I just wanted to give you all an update that there was an increase to fees that happened at the last Board of Selectmen meeting. With the camps in the aquatics program, it's expected to generate an additional about $55,000 in revenue. And on the golf side, about another $25,000 in revenue. So hopefully we can see those results, and that will give us a total of about an extra $80,000 a year.
And I just want to chime in and say thank you. This was a topic that we had significant discussion about, Art and I and the subcommittee looking at Simsbury Farms, and there was substantial resistance to increasing any fees. And that obviously changed, and I think that was the right decision. And so thank you to everybody who was involved in that. I think that's a good step.
Very much agree.
Agreed.
And then the last item was just a quick update on the town facilities master plan. Tecton Architects did make a presentation at the last Board of Selectmen meeting on some of their findings related to the study. So based on their initial results, we do have a good base amount to use in our fiscal year 22 capital plan, which will provide during the budget season. And then the energy portion of the plan is still in process. So as they tighten up and finalize those things, we'll be able to utilize those numbers throughout fiscal year 23 in anticipation of the fiscal year 23 budget to get everything finalized on our end. Any questions on those items?
I'm just going to take a break here and say this would be a great place to really give kudos to town management, and Amy in particular. Had the pleasure of sitting in on the presentation to bond council and the bond rating people, and the numbers speak for themselves. We should all be proud of the fiscal responsibilities we have for the town, but the ability to communicate it in an effective and convincing way falls largely on Amy's shoulders. She did a great job. I was very impressed with the rapport that she has with the rating agency, and so we are very, very proud of you, Amy, for that great job.
Thank you.
All right. So next up is quarterly budget status report.
So just starting off with the general fund, a couple of highlights here. So we're currently at about $67.3 million in revenues, or 64% of budget. You will see on your report that the building department is having a great year. They're already exceeded budgetary estimates by almost $300,000. And this is related to the permit fees that they've collected. The finance department is not doing so well. As you know, interest rates are low, and we had budgeted about $400,000 for our investment income, and currently we're only at about $32,000. So needless to say, we will not be hitting that budgetary target this year.
So Amy, can you talk a little more about that? I'm just not, I'm not an investment person. I was not aware that interest rates have been low for quite a while. So I'm confused about why they dropped off so much for us. What happened here?
It's not for us, it's for everybody. So the interest that we were making on our investment income from our bank accounts and from our investments was at a certain point. And then when the pandemic hit, all of the interest rates dropped. So when that happened, our investment income dropped. And that's also the reason that you're seeing the influx of people financing their homes.
So okay.
Is when you say investment income, it's not all interest. It includes gains from equities as well, or not?
Yeah, so we have some modest. We invest in STIF, which has a variety of CDs, and I forget what else they're invested in off the top of my head.
It must be short-term stuff that it dropped off so quickly.
It is. It's all short-term stuff. We don't have any real equities, so to speak. We're not allowed to invest in anything that would be of a risky nature with town funds. So there's probably some things that we can do for some longer-term benefit. But as far as right now, we're pretty much just where we're at.
Interest rates on overnight money are practically, in all intents and purposes, zero, right? I mean,
much.
10 basis points, and that's
right.
12 maybe.
Right. So the bank accounts are obviously limited, and then we have a small amount of income coming from our investment accounts. Which is actually a segue into the town clerk's revenue. The recording fees are actually already over budget by $88,000. And our conveyance fees are already at 80% of budget. So with the low interest rates, people have been refinancing. There's a housing boom after the pandemic. And so we're definitely seeing the revenue benefits from those items. On to the expenditures, we're about 51 point.
Amy, before you go on to expenditures, one quick question. Mm-hmm. Are you anticipating, you have their expenditures are currently proceeding according to budget. Are you anticipating any additional appropriations? Are we going to come in under the expenditure budget?
So I was just going to talk about that. So on our expenditures, we're about 51.8 million or 50% of budget. We do have some savings that we're realizing right now within the expenditures. So about $80,000 due to some vacancies. We have 4 vacancies in the police department. We have 1 in planning, town clerk, and social services due to some retirements. Conferences and education, we'll probably see about $50,000 in savings there. And then our COVID expenditures to date are about $57,000. And if we have to go through, or when we go through our referendum for our budget, I assume that there will be additional expenditures there just related to setting things up, sanitizing things of that nature, similar to what we did for our elections. So on a super conservative estimate, I put in $80,000 in COVID expenditures throughout year end. So with those things combined, the $80,000 in savings from the salaries offsets the $80,000 in COVID expenditures. So we'll probably end up to the good on the expenditure side by about $50,000. And then if I take a look at the revenue side, anticipated year-end savings in conjunction with the expenditure savings will probably be to the good and a conservative side of about $600,000. So no, we won't need any additional appropriations.
Wow.
Good deal.
Okay. Moving on to the Simsbury Farms Fund, you'll see that our revenues have exceeded our expenditures by about $115,000, related to the golf activities. You can see under the recreation programs that we have revenues less than the same time last year, obviously due to the pandemic. And then you can see under the expenditures that there's an offsetting decrease in expenditures there as well. And then if you take a look at the golf course fees, you can see that we are up substantially compared to the same period last year. So last year we were about $479. 479,000, and this year about 658,000, so almost $180,000 increase. Moving on to the health insurance fund. So our revenues currently exceed our expenditures by about $730,000. And the one thing that we always like to take a look at is where our reserves are at. So currently we're at about $5.1 million in reserves, or 35% of expected claims. And as you heard me say many times before, our goal is about 20 to 25% of expected claims. The other thing I wanted to draw your attention to is the claims data that we have within the financial statements. You'll see that our budget is about $14.7 million for claims, and we're currently at about $6.3 million. So we're halfway through the year. Even if we doubled that number, we're probably a little over $12 million. So that's almost $2 million in claim savings. If that is realized, then our total reserves will likely be around 40%. So we are meeting with our benefits consultants at the end of this week. They're going to give us some revised projections for fiscal year 22 budget. And we will also be discussing with them what we can do with those reserves as far as a premium holiday for employees and for the town to help out with the budget, what our options are. If they do see a spike coming in the future, how much we should be reserving. You know, should we go to 30% of expected claims because of everybody canceling their appointments due to the pandemic, or do they think things will be status quo and we can utilize some of those reserves to offset the budget?
So, Amy, I'm glad you're going to come back to us with more information on that. But so do you know, are there any options about just, are we allowed to take money out of that reserve fund and put it into capital or the general fund, or does it have to stay in there and only become a premium holiday?
It does not have to stay in there. We can use it for other things. But I think Maria can probably speak to this better, since it's not only town and board money going in, it's employee money going in. So I don't know if there would be any sort of, backlash, if you will, from the employees that the town is taking the benefit and they're getting no benefit when part of it is their money as well.
Well, so I do want to address that, and I don't have an opinion on it, but we did put in a huge chunk of money last year. That was not employee money; that was town money, right? And so I want to understand better how one would think about giving that back to the employees when it was the taxpayers that put in. What did we put in? 800,000 or something like that?
We put in 850,000.
Yeah. So is there a way to take that $850,000 back out, put that back in general fund, and then if there's still leftovers, share the excess with employees on a pro rata basis?
We could.
So who will make the decisions about how this gets handled?
That would be Maria, Matt, and myself.
Maria, who? Oh, Matt. Okay.
Myself, yeah.
So there's no input by the Board of Finance. We threw in the 850,000, but we don't have any input on the back end.
I mean, it's not part of the approved budget. So authoritatively wise, I don't think so, but it would obviously be reviewed with you all during the budget process.
Okay.
So I think if we did a transfer, Linda, to your point, if we wanted to do that, it would have to be done in conjunction with the Board of Selectmen at this point. At one point we did put money into OPEB as sort of the compromise position, if you don't want to use it for.
Oh yeah, we know that $3 million went in, and then we wanted to get it back, and we have never been able to. So I think we need to get some more information, Linda. I agree with you. I think we should look about. I would like to see this help on the operating expense side going forward. So the first thing I think we need to do is get the healthcare insurance actuary, whatever, to give us a sense based on this experience what the new go-ahead price is. But it does seem, to the extent that we bolstered the reserve fund and now the reserve fund is above its target, that the opposite ought to be able to happen
Right.
reflexively. And I intellectually agree with you. But so let's get some more facts, and then we should also just fact check what role we do play in that as it relates to a transfer in or a transfer out. All right.
I think we need to also just expect that there's going to be some volatility, given that we're in the middle of a pandemic. So I wouldn't be putting money in and pulling money back out. I agree we need more information, but I would expect claims to jump if the vaccination is proving out and working, that there may be other health issues that people have been avoiding, and that could be actually
there should be pent up demand for elective procedures. That's for sure. So,
or mispreventative, and then things actually occur that would maybe otherwise wouldn't have.
Yeah.
You check with council about whether we could appropriate it during the budget process as we do other funds?
Yeah, I think so this is meant to be a budget discussion. This isn't something to be a discussion now for something that we're going to do before the budget season. So any recommendations or anything that we have related to this money will go through the budget process and will be approved through the Board of Selectmen and then the Board of Finance.
All right, fair enough.
Actually, that's all I had on major items, unless somebody else has anything else on any of the other statements.
Nobody mentioned what a first-class problem it was to be talking about having too much money in the insurance, as opposed to the opposite. But, all right. No, I think we're good. Any other questions on these?
Yes, sorry. I just have two quick questions. One, TAR is now at 1.6 again. Can you speak to why that is so high?
I have no idea. I'd have to reach out to the state.
Okay. I haven't got
For
that.
the allocation for the, look at it.
Yeah, because I thought we budgeted money out of them. We always get the same amount. Did we get an extra infusion of money there? Well, whatever, you can get back to me on that. And then the second question was on the capital projects. One of our capital projects, and it's hard to see, but I think it's highway pavement management, is showing a deficit at 147,270. The pages aren't labeled, so it's under, go to sewer, then town projects. I wasn't sure if you could speak to how that is or why that is.
So the highway pavement management was balance at 1231. Oh, because this was done before you guys appropriated the additional funds for the aquarium money.
Yep.
That just has to be updated from the next one.
Okay.
And then the town aid road, yeah. So the 572,000, I just wanted to look at that before I answered you. Those transfers already did come out. And then if you recall, there's additional uses on the capital plan going forward that would spend those additional funds in coming years.
All right, next up is the Board of Ed use of the non-lapsing fund for COVID-19 related expenses.
So I will speak to this one. So as you may recall, at the end of fiscal year 20, there was excess funds from the Board of Education because they had to close the schools, about $266,000. And during this time, when we were closing everything out, schools were starting up, and obviously their impact for COVID was quite substantial compared to that of the town, with creating the hybrid schools, with creating, having to get additional IT infrastructure in place, everybody having their own Chromebooks, things of that nature. So they've spent over $850,000 in expenditures related to COVID. Some of that is coming back via grant funding. And then also some of that we had appropriated, like I said, at the end of last year for this reason. So a couple of things that we did, we actually did put in a current year spending freeze to try to save as much as we possibly could. We don't want to have to use all of those non-lapsing funds. And then in addition to that, we are getting an additional $430,000 in the coming weeks to cover some of our COVID expenditures. A couple things around that grant. First of all, the grant is for a 2-year period. So have 2 years to use that money. And then also when notice of that money came out, although we can use it on COVID expenditures to date, they also, the state's goal, if you will, is to utilize some of that money for students and some of the intervention efforts, considering students are behind because of the hybrid learning. So we've actually seen that in Simsbury as well, that $850,000 is all of the direct related COVID expenditures, but we do have some additional indirect COVID expenditures related to increased tutoring, substitute hours, things of that nature, because kids are falling behind and they do need that extra support. So the Board of Education would really like to take some of those grant dollars, if they're able, and build it into the fiscal year 22 budget to be able to have a summer school, if you will, and be able to get kids back up to where they're supposed to be. We don't have the finalized numbers on what that will cost us yet, but that is the reasoning behind not using all of that grant money up front.
So I had a couple questions here myself. I always think of this non-lapsing account as being sort of in the $200,000 to $300,000 range.
Yeah.
So this is an extraordinary year, but how did it get to be $650,000?
So it was always carrying a balance of $385,000, and then the $266,000 came from fiscal year 2020.
The year ended June 2020. And so when we did the budget we're in, we did not use any of the non-lapsing plus the profit from 20 in the operating budget this year.
When they did the fiscal year 21 budget, no, they did not include utilizing that $385,000 in non-lapsing.
Okay.
And
I'm not trying to be. I'm sorry, just go ahead. This is always a head scratcher for me, and just wanted to be sure that we're, and I'm in favor of using this for these kinds of things. But if we appropriate this, we will then reduce the non-lapsing fund to zero.
If all of it is needed, yes, the non-lapsing fund will go away.
And then when we get to June of 2021, if there's excess funds, that would go into next year's non-lapsing account?
That's up to all of you.
we vote on it.
Okay.
That's a vote each year.
Yeah.
So, Amy, I just want to understand, isn't some of that potential cost stuff that would be reimbursable under upcoming federal programs? And if so, would that then replenish what was spent out of the non-lapsing account? Or what happens to that money? The Board of Ed keeps it all? Does it come back to repay the $651,000? How does that work?
What do you mean additional federal funds?
Let's say there's a summer school program and the federal government puts up, 75 cents on the dollar for that. We don't know that they're going to do that, but that's the kind of thing they.
So we're under the impression that that's what this money is for. We were not given any indication that we would be getting any other funding. The only other funding that they're supposedly looking into is because there's so many cafeteria funds in the state in a deficit position. They are looking to assist with funding for that, and nothing has come of it thus far. But we haven't been told about any other allocations to be used for summer school.
But in the federal package that will be debated and voted on prospectively, I don't know what's in it. I'm sure nobody does, or very few people do. But I know there's been a lot of discussion about wanting to provide some funds for municipalities and states. And so that's why and education is clearly a key concern in Congress. And so I'm just wondering if there would be, there's the potential that there's money. I mean, there may not be, but if there is, my question is, how do we handle that so that in essence, the Board of Ed doesn't get paid twice for the summer school program that they provide. I mean, it's clearly a COVID-related expense.
So the way that the towns have been doing it compared to the boards of education have been very different. So the allocation for the town, as you saw at prior meetings, originally it was a reimbursement grant, and then it turned into a per population formula, and then they just gave us the money. On the State Department of Education side, it's actually all reimbursement. So we have to put in for it. We have to prove it with purchase orders and invoices. And that's the only way that we get our money. There is no bonanza for here's your population, here's your money.
Right.
Through reimbursement grant. So we wouldn't get paid twice for it.
Well, if we say, yes, you can use the 651,000, they will have spent that money and then they can put in for reimbursement, right?
Well,
is that it? No?
Yeah. So if we were going to get reimbursement, so then we'd have to transfer their grant funding. And then at the end of the year, their operating budget would have savings. And then those savings would be allocated by the Board of Finance.
Amy, are some of these expenditures also reimbursable under FEMA?
That's a really good question. So the stuff that we've put in for FEMA, it has gone back and forth. Initially, we were told, yes, it's reimbursable. And then we were told, no, it's not reimbursable. And then we finally saw some light. We got to the end. They said, this is all we need. And then it's been silenced thus far. So honestly, I have no idea. We cannot get any direction from FEMA. You and I had a discussion last Thursday. I was going to follow up on something. I emailed them, nothing back. So I honestly don't know. I'm not counting on FEMA as a funding source at this point. If they come through, great. If not, then I don't know.
So I did speak with Ms. Glassman today, who's in the governor's office, and she thought that there would be an update for towns mid-March in terms of additional dollars. There have been some reports that some of the cities are going to get some federal dollars if that comes through, and it would go to the districts, but we don't actually have school districts or regions. So the question is, how would smaller towns get reimbursement? And they haven't figured that out, whether it goes to the state and then a supplemental. So there may be additional funds coming.
So there is something else related to those federal funds too that's actually a point of controversy right now. People are being told that those federal funds are being used to fund the ECS grant, which is obviously not something that people think that they should be doing. So that is a point of contention right now that's going back and forth.
Wow.
So Amy, is there a budget? I mean, I have no idea how much they normally spend on summer school. I mean, there normally is some summer school, but is there a budget, a programmatic description of how many kids are expected to be in this program and what the costs are? I mean, I don't feel like I have a sense of if they just want the whole 651,000, but we don't really know how much it's going to cost.
And to Linda's point, wasn't it always a summer school? I thought was always profitable because the students actually paid to go to summer school.
I think some of them do. I know it's not profitable. I can get the specifics on that. But it's not that we want to use the whole 651,000. We could accommodate using the grant funding. We just prefer to use the grant funding in accordance with what the state goals are and utilize our money for any COVID costs that we need above and beyond what the freeze is going to provide us. So we don't need it all.
So are you asking though in this action request for us to release all 651,000 without knowing precisely what it's going to be used for or how much of it will be used? I'm just confused.
It will be used for COVID, and in order to have the expenditures approved, if you will, we do need the appropriation. So as of right now, I can't tell you how much our spending freeze is going to give us. So yes, we are asking to be able to spend what's in the non-lapsing if we can't accommodate with the spending freeze up to that amount.
But we do know 850 has been spent, and it's been spent within current appropriations, which means we're going to be over or under budget, which is why you're asking for the appropriation. Is that correct?
Right.
So up to this point, they were spending within current appropriations, but because there was a bigger spend on COVID related stuff, it's not going to be enough to get them through to the end. And we know that spend was 850.
Right.
Amy, you used to give us sort of a summary of COVID expenditures. Maybe we can go back to that, the everyone fraud categories, and then Linda, we can all track it and sort of see what it's being spent. But this is really to cover expenditures that have already been made for the most part, right?
Right. They have already been made. And actually, if you look at the last COVID report that I had given you all, it actually will show that it shows over $800,000.
So it's just a way to cover known expenditures on COVID already.
Right. So yeah.
But we again, some of those will be FEMA reimbursable, right?
No. So these are for anything that is not being reimbursed. Anything that has already been reimbursed is out of the grants fund. We've already accounted for those, and we have the funding for those.
But there may be some FEMA reimbursements that you could apply for if they ever return your phone call.
Yeah, I mean, yes. Maybe next year, maybe. Yes, it could come in.
So if this is this isn't then for summer school, this is for stuff that's already been spent.
No, the summer school was explaining why we don't want to use that $430,000 this year. We'd like to save some of it for summer school for the next year budget.
I'll go ahead and move. I mean,
I just want to clarify. So the Board of Ed has received $375,500 in grant funding to offset these costs, right? So what was the non-lapsing prior to the 375, or did the 375 even go into the non-lapsing?
No, the 375 didn't go into the non-lapsing, it goes into their grants fund.
And that goes to offset the 850?
Yeah.
Is that correct?
Yep.
And okay, is that included? Well, so it's not included in the 651.
What's not included in the 651?
The 375.
Right.
There was 385, Derek, and then they had basically a profit at the end of June that made the non-lapsing fund 651, whatever it is, and that's what they want us to appropriate today.
So we didn't use that to offset any increases in the Board of Ed budget last year.
Correct. So yeah, which is where we started.
So we overfunded them. Yeah.
All right, full circle. I'm good.
Yeah. But so they're asking us to appropriate this. We appreciate that. I think we want them to spend it and not carry it forward if it's a legitimate use, and the COVID expense seems like a legitimate use. So I'd be looking for a motion to appropriate this.
Were we going to look at kind of the general line items as what's made up the 850, or is that a separate slide? I'm sorry.
I think that.
Yeah, that was actually in prior packets, but I can revise it.
That's all right. That's okay. It's provided. That's fine.
So did you move it, Lisa?
did.
Does somebody want to second it?
I'll second it.
I will. All right. We'll give that one to Art. All right. Yeah. So Art seconded. All in favor, say aye. Aye.
Aye.
Any further discussion? Any opposed? All right. Passes. All right. Next is supplemental appropriation request for Farmington Valley Health District. Talking about how much here? $29, almost $30,000. Are there any questions on this?
Yeah, Amy, can you give some background on the FEMA reimbursements again?
Right.
Ms. Glassman from the governor's office said that these expenditures are actually eligible for FEMA, and they discovered that none of the health districts are applying for them because they are so overwhelmed. They don't have the administrative support to apply for them. But Amy was going to look into whether our donation to them could be a FEMA application, or whether we could support them administratively, or whether, and Ms. Glassman seemed to indicate that if they hire someone to apply for the FEMA grant themselves, that in itself would be reimbursable. So of course we want to support the health districts, but we also don't want to leave money on the table. So what's the best way to proceed?
So I did reach out to FEMA. Of course, I haven't heard back yet.
There seems to be a theme.
But Melissa did reach out to the health district and is able to provide some content on that. I believe they just didn't have they don't have the funds to front or something like that. But Melissa's here. She can take you through that.
Yeah, so that's accurate that they are eligible for reimbursement. I think it's not really a realistic option for the health district for two reasons. One is the one that Lisa mentioned, and the other, which Amy just alluded to, they do have money in reserves, the health district, but they don't necessarily have the capacity to fund the costs associated with this without knowing whether or not they're going to be reimbursed through the FEMA reimbursement process. And then as Lisa said, they really don't have the staff capacity to navigate that process. So it's really two issues there.
Well, but that doesn't make me feel good about, I'm sympathetic to them not having the upfront money. Is there a way we can give them this money contingent upon them filing for FEMA reimbursement? I mean, why would we spend the money when there's federal money available and they just, aren't getting around to applying for it? That doesn't make sense.
So theoretically, by them asking for the additional appropriation, they're doing what they normally do and pushing their costs down to the town. So then the towns could then apply for FEMA reimbursement theoretically as an additional COVID expense to assist the health district. And that's what we're waiting for confirmation back from FEMA on.
So that was Lisa's question. As long as we can still apply, then I'd be more comfortable with it. But I don't want to start supplanting federal dollars with our dollars.
We haven't heard back from FEMA yet, but we're assuming that we will be able to apply. And if we are able to apply, then yes, we will apply.
I'm just wondering if it makes more sense for the multiple towns to just provide funding to the health district to do one application to FEMA on their own behalf, rather than having each town go through the work of applying to FEMA. I mean, that just seems very inefficient. And it's sort of contributing to, I don't want to say behavior, but, to a pattern at the health department of just pushing expenses to us because that's easier than applying to the feds. I don't know, am I the only one who has concerns here?
No, I just think they're overwhelmed.
I can imagine.
So they themselves cannot do it. And from what Amy...
But they could hire somebody.
Yeah, but I think what Amy and Melissa were saying is they don't have the reserves to spend first and then seek reimbursement. So
this is $30,000. And so I'm going to say, and it's 7:00, we have a couple of other agenda items. I think this is not... It's a reasonable thing to talk about, but this is a yin and yang of having a shared resource with other towns. They've got $130,000 need. They push down to us. We have 30,000 share. I think we need to do it. And if somebody wants to volunteer to work with the health district to help them solve this problem, it does make more sense, Linda, clearly, to do a single application and to fund that. But right now, their need is this $30,000, and so I think we should appropriate it and try to figure out how we can help manage the shared resource with Avon and everybody else. But for the time being, I think we need to move this and move on.
I'll make the motion.
Somebody want a second?
Second.
All in favor, say aye. Aye. Any opposed? Aye. All right, let's move forward. Next is the supplement appropriation request for the Simsbury Spirit Council. I appreciate that we've had some guests from the Board of Selectmen and others that have been very patient through all of this. So appreciate the quick pitch, if you would. Is someone going to speak to this for the council, or?
This is Sean. I can start.
Sean is here.
And I'm
Carol.
here. No.
So Kristen is our staff liaison, so I thought we should let Kristen start. I am one of the co-chairs of the Simsbury Spirit Council. Nicole Kodak is the other co-chair, and Tanisha Grant is here as a vice chair. And Sean is our Board of Selectmen liaison to the Spirit Council. So we have lots of support if you have any questions, but I'm going to let Kristen explain the request.
And,
Sure.
and I want to say you didn't introduce yourself, but I recognize your voice, Cheryl. So I can't see you on the screen. So for the sake of others on SCTV who maybe not be able to see you, that was Cheryl Cook.
Yep.
Thank you, everyone, and thank you for inviting us tonight to speak to you about this request. And as you said, Mr. Pomeroy, I'll make it as brief as possible. The Simsbury Spirit Council is making a budgetary request to the town manager's office for the upcoming budget year. And the things that they would like to work on are kind of threefold. They want to work on data collection. We really want to be able to take a look at the town and a look at our demographics and what our population is experiencing themselves, and then also gauge what steps we need to take to make Simsbury the most inclusive environment that it can be. You know, we pride ourselves on being one of the top communities in the state, and we want to continue to attract people from all races, ethnicities, walks of life. We want to be diversive and inclusive, and this is our next step in helping the town to become that. Simsbury Spirit recently helped to pass a resolution with the Board of Selectmen around the DEI efforts, and that's what we're really focusing on right now. What Spirit would like to ask of you tonight is to make a supplemental budgetary request for the remainder of this year. Reason being, this group has a lot of energy. There's a lot of good people working on these efforts, and they want to go ahead and get started. And we believe that with a modest budget appropriation, they can start their work this year. Their appropriation right now tonight, they're asking you for $5,000. $3,000 of that will go towards the data collection so that we can begin that work. And then $2,000 is slated to go towards Simsbury Spirit would like to work on some marketing and some branding efforts. So that would go towards that piece of work. And with that, if I missed anything, if you have any questions, I'm here. If Cheryl or Nicole has anything that they'd like to add as their co-chairs, if you'd like to entertain their comments, they're here for that as well. How was that? That was
Great.
relatively quick. Okay.
That's good. Mr. Pomeroy was my dad, by the way.
Mr. Chairman, I'll move approval.
Anyone want to second that?
So I just have a question before we get there. I'm totally supportive of what the group is doing and of them spending the money. The concern I have is Amy reported earlier that we have a surplus. We're not going to spend, we have, what did you say, $50,000, extra here and there. Do we really need to appropriate additional funds, or can we just give you approval to reallocate what you expect to save from somewhere else so we're not actually increasing the budget? I mean, you've got the money elsewhere. Can we just tell you to use that?
So we would just be increasing the appropriation, which we need to make the transfer. There would be no revenue source. So it would be coming from our year-end savings, essentially.
Okay.
I think you're both saying the same thing, I think.
Yeah.
So you would just encumber
Coming out of savings.
your expense to pay for this. So forgo something to pay for this.
Yeah. All right.
So not reserves.
Right.
Perfect.
Okay. That's great. I'll second the motion.
Thank you. Moved by Mr. House. Thank you, Art. And seconded. All in favor, say aye. Aye.
Aye.
Anyone opposed? All right, that passes. Thank you, and we hope you enjoyed the show.
Thank you very much. We were not expecting that, but we're very grateful.
Thank you.
All right.
Have a good night, everyone. Thank you.
Thank you, guys. Appreciate it. Next item is the annual town report. And do we really, is there a discussion about this? But it's attached in your packet.
Nicely done.
Yeah. I love what somebody wrote that I wrote. The letters are nice. No, they're good. Yeah, it looks good. It looks nice. And I think we had comments last year, and I think this is definite improvement from what we produced last year. So it's good. Looks good.
Yeah, so it has to come to us because it's a charter responsibility. So that's all.
Yeah.
I agree. I assume someone's going to go through and edit it. There's a bunch of places, for example, in education, your subject and predicate have to agree. We don't want to say the Simsbury Public Schools was faced, for example, and things like that. So I assume somebody's going to go through and Eric's has a couple of, but just tightening up and language corrections in it, which I assume will be made.
I'm sure they will be, Art.
Good.
Great. Amy, is this the point where we have some communications? I don't think is there anything here that we need to go through?
There's one item in the communications that actually relates to the item you skipped. So the retirement plan subcommittee meeting report.
I'm sorry. Yeah, I skipped that.
Yep.
Yeah, I can give that update. Rob, I was able to grab my notes.
Okay. So
the retirement subcommittee meeting, we met in first week in February. DeMeo Schneider gave us an update on the ICMA transition for the defined contribution plan. Everything is on schedule with no issues as far as the update was concerned. They gave us an update for 2020 performance. The portfolios were in line with expectations. Their expectations were for moderate growth in 2021. Chris Ketchum did note that their current actuarial return assumption is still 6.75, and I think his forecast for the return for the portfolio is around 6.4%.
Kevin, in our S&P rating, maybe this is to Amy, they say it should be at 6. Amy, can you speak to that?
So I think somebody questioned that at the retirement plan sub, our actuaries are still fine with 6.5, but they are seeing 6 right now as far as their long-term estimates. But we did confirm with Millman that 6.5 is still appropriate right now.
Thank you.
I didn't hear quite that he was recommending we go to 6. I think he said he sees 6.
He sees it, yeah.
But maybe I was hearing with my selective filter on.
The only other thing that took place is we have the investment policy statement. The last time it was reviewed was 2014. In your packet we provided a copy of it. We wanted to make sure that we presented it to Board of Finance for us to review on the subcommittee.
I find, Linda, is it possible it was 2014 that we looked at this investment policy?
I know. Here I am, the policy maven. I don't know.
No, I remember a fight about whose policy it was.
Yeah.
Wasn't there?
Yeah, Rob, I think
fight's not the right word. We don't use fight anymore anyway.
That was the DC plan policy. This is the DC plan policy. And so this is the one, it's in your packet for tonight, so you can see if you have any changes.
Okay.
Reach out to Kevin and let him know, but they will be reviewing it at the next retirement plan subcommittee for update.
Okay. Am I crazy that there was some significant discussion about whether it was our policy or their policy?
That was the defined benefit plan policy. This is the defined contribution.
Oh, okay. All right. Sorry. You just said that and I missed it, and then you said it again and I finally got it.
It's okay.
All right. Okay. So anything else that we need to do? We are going to do an executive session, correct?
Yep, for the cybersecurity update.
Yeah. So I don't know, does Tom make that happen? How do we do that?
You have to make a motion to amend the agenda and then a motion to go into executive session.
Okay, so I need a motion to amend the agenda to go into executive session and invite the members of the Board of Selectmen who are also in attendance tonight to participate in that executive session. So I need a motion.
I'll move back.
I'll second.
Moved by Linda, seconded by Mr. Perrell. All in favor, say aye.
Aye.
All right. So Tom, or whoever, we could need to, I guess we go off the television, right?